Hi, this is Ian Coleman, and this is this week's video analysis for the dollar index and the FX majors going into the week 21st of January 2019. We're going to start off with the dollar index, break down the time frames, then move on to the FX major currency pairs, highlighting what we're seeing this week, support and resistance levels, chart formations, etc. So we're going to start off with the dollar index. We have seen a move to the upside. In fact, really the only dollar-based major currency pair that's moved in the opposite direction this week, or last week I should say, was sterling dollar. So we're going to break down the time frames, like I said, and just highlight what we think's going on in these currencies. The weekly chart, we broke out of this wedge formation to the downside. We had 4 weeks of net losses. However, this dip has been bought into. I'm now wondering whether or not we are going to achieve levels to the 61.8% pullback at 97.86. However, the long-term bias is still to the downside, and here I've just put P9 onto the monthly chart, and that is a DMARC perfected 9 count. Now that highlights that we should see at least a decent correction to the downside. So even though the daily chart this is only showing a 4 count, I think that we will potentially see continued upside movement in the dollar, at least at the beginning of the week, and then potentially a double top or even a treble top formation before we start to move again to the downside. And I think this time frame is going to be the dominating factor in the months ahead. So breaking that down onto the other currency pairs, let's have a look at the monthly chart. I mean, here we can sort of see how long we've had this period of consolidation. I mean, really 3 months of little net change in euro dollar. If we go to the weekly chart, we've got a DMARC 13 count here, normally indicates the end of a trend, a bullish outside candle, or a bullish engulfing candle I should say, on the week 12th of November. And then we've just seen this mixed and volatile price action. The daily chart highlights the pair to be in a corrective channel formation. There's trendline support at 113.25. I think we're going to penetrate that at the beginning of next week. Looking to the 4-hour chart, this looks like quite a good setup for for Elliott wave formation. So 1, 2, consolidating in 3 and 4, and then potentially down to 112.60. We have got some support at 113.25, which we're going to monitor. I mean, the medium-term bias is still to the upside, but the intraday outlook is still selling into rallies until we get that turnaround in the dollar index. Cable, and again the weekly chart, exhaustion count, bullish outside candle. We've seen a move to the upside. We did close the week little net change, and that's basically for the strong rejection of the trend of lower highs, which was seen on Friday. We've just hit the Ishimoku cloud, a break of last week's high, which comes in around about, let's just have a look, 130.01, and the measured move target is up here, which is 133, the figure. Support, strong support from our indicators, is located at 127.84. Dollar Swiss, and again wedge formation has an eventual bias to break to the downside. However, posted a hammer. We've had continued upside movement in this currency pair. I'm just highlighting this bearish divergence, which normally indicates that we will have an eventual bias to break to the downside. However, there's really no indication of that happening yet. We pushed through the 161.8% extension level on Friday, but we've got this previous swing high from December in close proximity, and if we look back, it's been an area that's been pretty pivotal, and again acting as resistance on the 12th deck. So we don't really want to be buying into that resistance area. And in fact, we've got bespoke support at 98.97. If we move that lower, we've got reverse trendline support at 98.88. So At the beginning of next week, prime area to get long of dollar Swiss is around about 98.90. We've got a 261.8% extension level at 10083. If we go back to the wedge formation, we've got trendline resistance at 10155. I don't think we're going to move that high, but we never know at this point. So, like I said, buying into dips really is going to be the play for us, dollar Swiss, at the beginning of next week. Dollar yen. A few things to highlight here. The intraday chart, we broke this triangle formation to the upside. Bespoke support is now at 109.25, and then we've got what was resistance now becomes support at 109.10. So a decent area of support here. The reason I've shown this time frame is because we have posted a 13 count on the intraday chart, and if we go back to this time frame, which is the daily chart, we are very close to this 50% pullback level. So I'll be wary of buying at the open at the beginning of next week. I think with higher highs and higher lows, and the call is still got to be buying into dips at the moment, but I am wary of that 13 count and this 50% pullback level. Dollar CAD, bearish outside candle on the weekly chart often indicates the end of a trend and the start of a new move to the downside. We've had a continuation, but last week mixed volatile trading has just left that in very small inside around we posted. The daily chart, sorry, the 4-hour chart highlights that mixed price action a little bit better. An AB equals CD formation takes it to 133.70. And that's also where the 38.2% pullback, Fibonacci pullback is. If we look to this time frame, which is the daily chart, and this has to be the favourite pair to play, if you like, next week, then you've got a potential head and shoulders, so left shoulder, potential right shoulder, neckline. So we're looking for probably some upside pressure at the beginning of the week, but that upside pressure to be limited. And we're looking for that 38.2% pullback level around about 133.70 to attract sellers. Excuse me. Aussie dollar weekly chart, we completed a 5-wave count to the downside. Last week's price actions posting inside Arami. We've got some bespoke resistance up here, so I think what we are going to do is move higher and then move lower to form probably a reverse head and shoulders, and then move again to the upside. The intraday chart, this is a 3-hour chart, we can see a 5-wave count completed. We've got trendline support at 71.25. I don't think that's going to hold. Normally on first wave counts, the retracement is at least to 38.2 and more commonly to 50 and 61.8%. So we are going to be looking at buying into dips, but we are going to be looking at where our bespoke support levels are and if they marry up with any of these levels. But at the moment, really in no man's land for us, because we do want to get long over the medium term. We don't really want to be playing what could be a very limited move to the downside. Euro sterling, and I think the most interesting time frame to highlight this week, if we continue or we hold around these current levels, then we're going to post a bearish outside candle on the monthly chart, and also potentially a wedge breakout. Has an eventual target area of 83, the figure. If we go to the weekly chart, spikes, rallies continue to find sellers. We've got trendline support 86.70. If we go to the daily chart, we just clipped a short trade late on Friday. We're looking for a 5-wave completion down to around 87.03. We're still looking to sell into rallies. 88.38 is bespoke resistance, and then 89.03. Euro yen. Most interesting resistance is here. 126.80 is reverse trendline resistance. 126, I think it's 85 is our bespoke resistance. So a good upside barrier here. If we look here as well, it was support on the week 22nd of October. It now becomes resistance. If we go to this time frame, the daily chart, I believe that we could see a stronger correction to the downside here. We've posted the DMARC 12, but the DMARC 13 has to be below the DMARC 8, which is here. So I'm expecting or looking, if we do move lower, to initiate longs around about 122, the figure. Okay, thank you. I hope that's been understood, or at least our outlook on the FX majors. I hope you have a good week, and we'll speak to you again next week. Many thanks.